What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on TSLA ticker. And in today's video, first of all, I will show you where we are on a price chart and how we get there. Then I will continue with the fundamental news and I will show you that analysts are not always doing what they are talking about. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this very point, right after we had this massive bounce to the upside and this massive sell-off was the result of the invasion of Ukraine, and definitely it is a very negative sign for entire markets. But right after that we have very good movement to the upside, and definitely it is a good sign for Tesla. And I have to say that this volume, the green volume, as you can see, is much higher than the red one. This means probably it is the lowest point of the price action so far, and I think it might be the lowest point for the entire retracement from the top, from its all-time high. That was in November, right here. And by the way, it was my main call to sell your position with Tesla, because we hit our main target, and you can watch my video in the description below and on your top right corner. And the win rate of my forecasts is about 80% on Tesla. That's why you can rely on my analysis as a part of your due diligence. So, and let's continue with the fundamental news. What was the reason of this movement to the upside? First of all, let me show you this. On February 28th, we have this article and it says, Tesla and other EV stocks soar as investors bet on shift away from Russian energy dependence. And let me quote you this. Electric vehicle stocks soared on Monday as investors weighed the possibility of Russia's attack on Ukraine, speeding up the timeline for EV adoption in major nations. And notable gainers in this sector included Tesla as well, and it has about 7.9% of movement to the upside. And let me quote you this. Investors seem to be betting that government investments in US and Europe could be accelerated as a part of a broader push to reduce reliance on Russian energy. And definitely with this step, the economy of Russian Federation will be ruined, definitely will be ruined. And the potential turnover for the US and Europe economics might be very beneficial in the long term, because the United States and the European Union will be less dependent on this type of quote-unquote suppliers. So, and let me show you another article. It was published on February 25th, and it says, Tesla rides higher after Daiwa turns bullish. And let me quote you this. Daiwa upgraded Tesla on an outperform rating after having the EV stock slotted at neutral. The firm pointed to Tesla's ability to export out of cost-efficient China and history of managing chip shortages last year better than peers as factors that could strengthen its competitive position under the current Russia-Ukraine situation. At the same time, higher oil prices and potential scenario of fuel shortages, especially in Europe, could accelerate the shift to EVs. While the start of production at the Berlin plant could be delayed, recent media reports of Tesla increasing capacity at its Shanghai facility gives it more flexibility to meet European demand. Media reports indicated that Tesla is expanding its current Shanghai gigafactory to produce close to 1 million units annually. Daiwa also noted that Tesla is planning to build a new plant in the vicinity of its existing plant with an incremental capacity of 1 million units, and the Austin plant will raise capacity by up to 500,000 units over time. On the other hand, the current situation with Russia and Ukraine seems more perilous for Tesla's competitors. Also seen working in Tesla's favor, Daiwa thinks a decline in profit contribution from ICE vehicles could slow down investments into EV expansion being targeted by competition. And they set the price target of Tesla on $900, and it represents 12% of upside potential from current levels. So, and let me show you this forecast from TPRanks. It has 29 ratings, 16 of them suggest to buy, 7 to hold and 6 to sell. And the price targets are from $313 up to $1,580. And let me show you these forecasts in details. We are on marketbeat.com, and let me show you that we have all of the analyst firms that has their own forecast. And for example, if we will take a look on Barclays, as you can see, they have a negative 60% forecast and their price target is $325. And let me show you the list of Tesla's institutional owners. And if I try to find Barclays right here, as you can see, they have 3 positions and they updated this position on February 23rd. And they increase their long position with this call by 8.5%, reduce its short position with this put by 18%, and slightly reduce its position with the stocks itself. But if you divide the value of the position by number of shares, you will have the average price of slightly above $1,000 per share. And why in the world this company, with their own forecast of $325, increase its long position by 8% and didn't close its entire position with Tesla and reduce its short position by 18%. And it is completely nonsense. On top of that, let me show you another company. For example, if we will take a look right here on JP Morgan Chase, and it has the downside potential for about 65%, and they increase their price target from $295 to $325. And let me show you right here, if I try to find JP Morgan right here, we have several positions, and as you can see, we have the same situation. They increase their long position with call, reduce its short position with put, and increase its long position with the stock itself. And if you divide the value of their position by number of shares, you will have the average price of $1,056. So why in the world they increase their long position with this asset if their own forecast for this stock is $325? It doesn't make any sense. So that's why I think Tesla for now is more bullish than bearish, because we have a lot of proofs that this movement to the upside might be the local bottom. And let me show you on a weekly time frame that we have a very bullish candle. And let me clean the chart a little bit. As you can see right here on my previous video, I've told you about this hammer candle, and we had very good bounce from the 55 exponential moving average on weekly time frame, and we closed this candle above this range. And despite of its red color, we have very good rejection from the downside to the upside, and next candle opened and probably will be closed above the 55 exponential moving average. This is a very good bullish sign for investors in this company, and that is why, in my opinion, you can add to your position if you want to invest in this company for the long term. And my main target for this company is at least $1,300 by the end of this year. And I will show you my forecasting details in my next video. But for now, if you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!